Let's talk about commodities now, where the international gold prices have edged down today as investors book profits after a 10-day high hit in the earlier trade. The Indian gold prices steadied at a 2-week highs today, and gold futures gained for the third straight day. But the premiums have come off their highest level in more than 2 years, with the supplies rising. Central banks have bought the most amount of gold since 1964, and the World Gold Council expects nations to buy approximately 500 tons of gold in 2013 as well. On your screens, the Indian prices are nearly 0.25% on the higher side, but we have seen the gold prices come off their highs. The crude prices in the meanwhile have declined today after a strong run this week. All eyes are on the GDP numbers coming with US, with investors cautious over the tepid growth outlook from the largest two oil consumers in the world. OPEC has decided to increase shipments from May on the rising Asian demand, and that really seems to be pushing pressure slightly on the prices. We have a word coming in from Barclays then, and Nigel is here to tell you what really they actually feel in case of the gold prices.
India is probably the biggest beneficiary from this decline in global commodity prices that we've seen recently. Our estimates suggest that around a $10 decline in the price of a barrel of oil, or a $300 decline in the price of gold per ounce, both of those would generate around 0.5% of GDP improvement in the current account deficit. And we expect this year that the gold and oil prices stay kind of where they are now, maybe increase a little bit later in the year as the global demand picks up, but certainly should be a lot less than the last fiscal year. So that will help India's current account position.
Let's also listen to John Woods from Citi Private Bank, who thinks that the dollar strength will mean further down pressure on commodity prices. He expects gold prices to stabilize, though, in the long term.
The dollar now, in my view, is set to strengthen as the US economy strengthens, and obviously that will have a negative impact on the dollar value of gold. Secondly, as is quite obvious, actually quantitative easing doesn't have a positive effect on price, as the BOJ is showing us. For example, the BOJ has announced a very substantial quantitative easing, and of course gold has been falling, so that relationship seems to be breaking down. And finally, I think that we can suggest and say with some confidence that the world is not where it was in 2008, and the risk of financial crises, I think, is receding, is diminishing. So the three pillars that supported this very aggressive price appreciation, I think, are somewhat crumbling. And particularly if we see the dollar strengthening in the weeks and months ahead, I think we can see further down pressure on the price of gold.
Point taken. There's the global view coming in for the commodities there, especially gold prices. But let's also get in Vijay Bambani, who's author and CEO, BSPLindia.com. Also joining us is Sugandha Sachdev, in charge metals, energy and currency at Religare Commodities, and she joins us in Delhi. Sugandha, hi, let's start with you first. And the kind of upturn that we saw in case of gold prices in last two trading sessions, and today, of course, there has been some profit taking. How would you want to trade the day?
Hi Manisha, we have seen a significant rebound in gold prices in last few days after we saw a brutal sell-off in last week and prices plunged to their 2-year lows to test a low of around 1320 an ounce at COMEX. But then this buying has majorly been supported on back of physical demand coming from coin sales as well as physical demand from Asia. There has been years of pent-up demand that has come into the market, which has supported prices. Also, there are expectations that ECB would cut interest rates next week, which is also supporting prices. But then I feel the overall environment for gold is slightly bearish even now. At these levels, I don't feel prices would be able to cross 1500 to 1520 an ounce at COMEX. So for my intraday strategy would be to go for sell positions in gold at levels of around 27,150, keeping a stop of 27,300 on the higher side, and prices are likely to drift lower towards a level of 26,850. Also, I would like to add that there can be significant volatile moves in the market, as market is eyeing the key GDP data from US.
Vijay, most commodities in last 24 hours have seen a very strong rebound coming in, and after European markets open, there has been some stability also. How would you look at the silver prices, the kind of run up yesterday and the prices today?
Manisha, even yesterday I talked about how the rebound is more of a technical pullback rather than a total trend reversal. Although I'm not half as bearish on bullion, especially silver, in relative comparison to gold, as a whole lot of market voices seem to be, because I think silver is looking oversold now at this point in time. Let's also not forget that whenever a vicious, sharp sell-off like this is seen, the bulls make multiple attempts to basically stabilize and push the prices back up higher. It's not necessary that the bulls succeed in their very first attempt. What is necessary is that all reactions downward should see either a higher buildup of open interest on the long side, or there is a higher bottoms and higher tops formation on successive declines. Even yesterday I talked about how the declines were very unconvincing, because even though the previous declines were being violated, the extent of violation was fairly fickle and minor, and the selling pressure was absolutely absent. There was no sign of panic sales on declines. So my guess is we could have a creepy crawly kind of a rally. We could see jagged movements and fairly sharp spikes in both directions. But silver especially, I think, over the next couple of trading sessions is likely to head higher. And my guess is that goes for even gold after some amount of corrective decline.
Sure. So buying on dips is a strategy onto these two commodities there. Sugandha, how would you look at the energy space, the crude prices, because they rebounded quite strongly in the New York session yesterday, and Asia onwards saw profit taking in them as well?
Yes, along with all other commodities, crude oil prices have also bounced back smartly, rather swiftly in the recent week, and prices have actually come off from their lows of around $86 per barrel in NYMEX. But then prices are not likely to sustain at higher levels, even though there are certain fundamentals which are supporting prices, be it the geopolitical tensions in Syria and also the positive inventory report from US in the last week, which is supporting prices. But then prices are likely to be capped at higher levels as the overall environment is not very bullish. I mean, there are concerns about the global economic growth, and IMF will also slash the global growth targets for this year. Moreover, the demand outlook has also been cut for this year, which is kind of bearish for the prices. So as long as prices are not able to sustain above $98 per barrel in NYMEX, I'm not very bullish on crude oil prices. Even for an intraday strategy, I would like to advise traders to go for sell positions at levels close to 5090 mark, keeping a stop of 5135 on the higher side, and prices are likely to drift lower towards a level of around 5020.
Sugandha, also what's your sense now coming in for the base metal prices, because we saw a good rebound as in all the commodities, but after that LME has seen more than 1% of a decline coming back for copper?
Yeah, base metal prices have also rebounded, Sarah, on back of bargain hunting after the heavy declines. Yes, but then I don't feel they are likely to sustain at high levels, even though there have been some news of refinancing in China. But yes, the data, if you look at the economic data from China, be it the HSBC PMI data or the manufacturing goods data from US or retail sales data, they've all been slightly weak. So this is painting a scenario for some more downside in the system. So I think there is some more pain for the base metals pack. For the day also, I would advise traders to go in for selling in copper at levels close to 388 mark, keeping a stop of 392 on the higher side, and prices are likely to drift lower towards a level of 382. In case of zinc prices also, I feel 103 would be ideal opportunity to go in for sell positions, keeping a stop of 104.10 on the higher side, and prices are likely to edge lower towards a level of 101 on the downside. But yes, nickel, I would like to take a contrarian call. Nickel prices are showing some promise as of now, as market has taken a support at levels of around 810 to 811, which is a very strong support level. So for nickel, my call would be to go for buy positions at levels of around 820, keeping a stop of 810 on the downside, and prices are likely to edge higher towards a level of 840 and then 865 eventually.